Welcome second PU Commerce students. Today we will understand maintenance of capital accounts of partners. There are two methods under which partners capital accounts are maintained, that is under fixed capital method, fluctuating capital method. So what is fixed capital method? Fixed capital method is one of the method where partners capital accounts that remains fixed year after year. It changes only when additional capital is introduced by the partners into the business or a part of the capital is withdrawn by the partners. There are two accounts that is prepared under fixed capital method, that is partners capital account as well as partners current account. So here is the problem. A and B are partners. Their capital amount also given. Their profit sharing ratio that is equal to 1:1. Their additional capital also given in the question. Interest on their capital that is given as 10%. Drawings 10,000. Interest on drawings also given. Salary is paid to A. Then commission, both partners commission. So there is a share in loss. So based on this question, we will understand preparation of partners capital account as well as partners current account under fixed capital method. So partners capital account, credit side, two partners capital amount that appears under credit side, additional capital that also appears under credit side. Partners current account, interest on their capital, salary, commission, these has to be credited. Drawings, interest on drawings, share in loss that must be debited. Profit on appropriation that has to be credited. So this is how partners capital account as well as partners current account must be prepared under fixed capital method. So based on the question, we will see balance brought down, that is the capital amount contributed by both partners. Their additional capital that is introduced on July 1st also has to be credited. Finally, it has to be total, write the same total under debit side. So that is the closing balance. This is how partners capital account has to be closed. Partners current account, interest on their capital that has to be calculated. A has contributed 10 lakh, 10 lakh into 10% plus 2 lakh into 10% into 9/12 because they have contributed on July 1st. From July 1st till end of accounting period, that is March 31st. So that is the amount of interest on their capital. So calculation is given here. So B's capital, he has contributed 15 lakh into 10% plus his additional capital is 1 lakh into 10% into 9/12 because he has brought additional capital on July 1st. So these are the amounts. So salary is given in the question, commission also given in the question, debit side drawings, interest on their drawings given directly. So there is a share in loss that is ascertained from profit and loss appropriation account. Finally, it has to be closed by the way of finding the total. Write the same total here also. From this total, as you deduct these values, you get a closing balance. So record that as balance carried on. This is how partners capital account as well as partners current account that must be prepared under fixed capital method. So second method is fluctuating capital method. So what is fluctuating capital method? This is also one of the method of maintaining capital accounts of partners that fluctuates year after year. that does not remains constant, that goes on fluctuating. That's why it is called as fluctuating capital method. Under this capital method, only one account is prepared, that is partners capital account. So how to prepare partners capital account under fluctuating capital method? So fluctuating capital method is a combination of these two accounts. In the sense, credit side, both partners capital, then their additional capital, interest on their capital, salaries paid to A, commission payable to A and B, their drawings, interest on their drawings, then the share in profit and loss appropriation account, share of loss. Finally, it has to be closed by the way of finding the total. Write the same total under debit side also. From this total, as you deduct these values, you find a closing balance. Again, from this debit total, as you deduct these debit balances, debit values, you find a closing balance. So this is how partners capital account that has to be closed under fluctuating capital method.